All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. R Pink, much love to you, man. Thank you for being here. Thank you for modding. Ryan Hinson, good afternoon to you. Javier, what's up, man? All my shorts were stopped. Man, I lost a couple of short trades as well. Yesterday, I explained in my video, I got stopped out on a short trade that was already open. In this area, I added to the short trade on Sunday on a second bearish back test of the value area low. But I got stopped out on the rest of it. It was still a small win, not near as big as I wanted it to be. And then yesterday, I took a swing failure pattern short of the highs around $65,400 or $64,400 and got stopped out overnight there as well. And I was looking for the first TP to be the point of control. You can see we didn't quite come down to that point of control. I was looking to like sweep this internal liquidity into that point of control. But we're pushing up. And I did let you guys know in yesterday's video, we were seeing some bullish CVD absorption within this move down here. We were seeing bullish CVD absorption on the charts, and absorption does play out 70 to 80% of the time. So that bullish CVD absorption played out with us taking out the highs. And the next resistance I gave to you guys on the charts was that weekly and that 786 Fibonacci, where there is still a chance that we could reject here and come all the way down to take out our 62.5K lows, but also our 62.2K double bottom lows. But this is kind of the last hope for the bears. If the bears cannot see a full rejection from this area, then I think, fortunately for the bulls, we are going to continue up to sweep our 65.4K highs and likely even to start sweeping up all of these lower highs in here, even up to take out our range highs around 67,250-ish and our 67K highs as well. So it's looking pretty good for the bulls. I did show you guys on yesterday's video. Let me zoom out to the daily time frame. On the daily time frame with yesterday's giant bullish engulfing candle. So you can see here's Sunday's red candle, Monday's candle, huge big bullish engulfing candle on the daily, huge volume imbalance candle. We printed a hidden bullish divergence, and the hidden bullish divergence on the low, by the way, on that low on Friday, we printed that hidden bullish divergence, and a hidden bullish divergence is a continuation pattern. So if you're looking from the 62.2K lows, we were making a higher low in the price action right around that 886 Fibonacci, which does give us bounces in sideways ranges. And we're in a sideways range up here and then within a larger sideways range within here. And with the printing of that hidden bullish divergence, it is a continuation signal, meaning that because we're making a higher low here, we're likely to make a higher high above 65.4K. And we're seeing continuation of that push today. We're seeing continuation of that hidden bullish divergence playing out today. Market Cipher has now crossed back up into the green on money flow on the daily time frame, and NAMI with today seeing another green candle close. I bet you this will also turn up into the green as well. So yeah, the last hope for the bears is kind of where we're at right now. It is a 786 Fibonacci. It is a weekly level, and in the scenario that we are going to see that bigger continuation to the downside to sweep out our 62.2K lows and potentially even coming down to 61K down here, we need to see a major rejection from this area. I guess we could see a couple more new local highs being made and maybe even SFPing 65.4 and then see that drop as well. And then that would give us kind of our trend to the downside, followed by some, a buying floor or a selling floor in this zone, more of a sideways range as well. And guys, we are in the bear market. We do know that at the beginning of July, I think it was. Let me see here. Let's go back to that 57.7K low. Yeah, at the beginning of July, we bottomed out as far as price goes. But we know that the bear markets in Bitcoin, the 4-year cycle, according to the 4-year cycle, we usually don't bottom out until about a year later, 365 days later, which would mean around October or sometime within the fourth quarter of 2026. But I also let you guys know, as far as price action goes, the $57,000 lows are very, very important lows. They're extremely important lows because we have multiple pitchforks that are coming down into the pitchforks that are support. If we look at our bearish pitchfork support at the bottom of our bearish pitchfork, last time we saw a significant bounce the last time we touched the bottom of the pitchfork. And with our larger multi-cycle pitchfork, let me just grab that on the chart. I know this is a this is review for a lot of you guys, but yeah, we even have this pitchfork here. You can see we're at the bottom of the lower band of the pitchfork, and then even with this guy, which is the midline right here, the midline of our multi-cycle pitchfork. So major support coming in. Now, if we can start to break out of this little range here, I mean, I think we're about to see a resolution of this range soon. And at the very least, we're about to see a resolution of this smaller kind of grinding price action that we've been seeing for the past 5-6 weeks here. When we start to consolidate this closely together, generally when there is a decision being made, whether the market chooses to pump out of it or dump out of it, there is pretty harsh continuation that and follow through on that move. And I do think that with what we're seeing right now, some of the bullish signals on the higher time frames, we could be about to break out of this range to the upside. We could be about to break out of the lower pitchfork band of our bearish pitchfork. Let me just hide some of this here on the chart. And we might be seeing that bigger push to the upside. Let's get rid of some of this here. Sorry, guys, I just wanted to clean this up a little bit. But yeah, I think that we could be seeing that bigger range break to the upside, or the smaller range break to the upside, and maybe even break this bigger range to the upside. But we're coming up into some very key resistance right now. It is pretty much the value area high of the range, which we did reject the last time we hit into the value area high around 65.4. You can see we had a rejection, and we saw a pretty significant dump from that. We're coming up into that general area again. And actually, because 886s and sideways ranges are so important, first off, we'll pull the 886 from the 62.2K lows. Let me just widen this a little bit here to our 65.4K highs. If you look at that 886 Fibonacci, that is essentially where we bounced from that 886. And let's go to the 4-hour chart. You can see that a little bit better. 4-hour chart, bounced from the 886, wicked past it a little bit. And if we pull a 886 Fibonacci from our 65.4K highs down to those exact lows, we're coming up and just barely front running. But the next, it's kind of this zone in here where if you start to break above that, you could see continuation to sweep all the way up above 67.3K. The purple box we're at right now is our internal resistance within this move down. And if we are going to continue making a lower low, lower high, and lower lows, then we would expect to reject from this resistance. This is our last kind of line in the sand here. And then if we do come up this high, I would expect at least a liquidity grab and then some sort of like head and shoulders mini distribution pattern up here where we're at least going to grab that liquidity with that head or tap 2 of a distribution. But welcome in, everybody. Thank you so much for being here. Crypto Wander 5813, much love to you, man. Thank you for being here. Thank you for modding. Dylan 1664, hello to you, my man. Looking to short, double, triple top here. Looks like 4s and 5s. Yes, it does look like 4s and 5s. So I'm going to go into this move up from last Friday. I want to go into this move up from last Friday because this does look impulsive, guys. And I talked about this a little bit yesterday on the video, but we could be looking at a 1, 2, 3, 4, 5, which is getting close to an end. Or there's a couple ways to count this move up. And so we'll zoom in on this and we'll look at some of the ways to count this move. But if we just look purely at volume here, we are seeing really nice spikes in volume as we're increasing. And even today, on that new high that we made today, it's essentially a double top in volume. So volume is still remaining high. And what we want to see for that kind of buying exhaustion to be coming in is we want to make new local highs with lower and lower volume, giving us a sign that this could be about to roll over and see that bigger reversal to the downside. So we're not quite seeing it yet. Let me go ahead and get rid of these 886s real quick. I'm going to also get rid of this local box of support because that's now changed. But let's talk in terms of volume profiles. So we've been looking at two major volume profiles for the past, couple of months, really. We've been looking since the beginning of June at a larger sideways range where essentially the value area, the volume profile is the same as far as the point of control, and the value area high are the same as our smaller 5-week long range. And then our value area low on the bigger range is just a little bit lower, coming down to kind of sweep all this liquidity that was created in here. But we're holding now. Last Friday, we had lost that value area low. We even bearishly backtested it. And upon the bearish backtest, I did expect for us to take out that low. It was really high probability that we took out the Friday low, but we didn't. We were able to consolidate over the weekend and then see a strong break back inside of our volume profile, essentially seeing this as a failed auction breakdown of this smaller volume profile in here. So now that we get back inside, the first order of business is to pump up towards the point of control. Well, we were able to just pump and continue breaking through the point of control yesterday, flipping it into support yesterday. And so now it's very likely that we do fill this volume profile in full, pretty much rotate back into it. You see the failed auction breakdown, and then you get back inside of it. You expect to kind of push up towards the tops of that volume profile, towards the value area high. And essentially, with us already seeing a couple rejections from that value area high, this time, if we do attempt to break out of it, we could see a true break to the upside and continuation to the upside here. And then, yes, it is possible. I know that we're in a bear market. Time is not on our side right now. We have some time to wait until the fourth quarter of 2024 or 2026, excuse me. We could continue seeing max pain and continue chopping sideways within this range. I mean, that would be quite troublesome. But the big thing I talked about in my title today, I think a major move is loading. And what do I mean by that? Well, we know that anchored VWAPs are very, very important anchored VWAPs as far as trend goes. When you're below a major bearish anchored VWAP, you generally continue the trend to the downside. And when you're above a major anchored VWAP and as acting as support, you continue that trend to the upside. But recently here, we've been really squeezing between two anchored VWAPs. We've been squeezing between that major anchored VWAP from 82.8, and we've been squeezing towards the anchored VWAP of the bear market lows. And you can see how these are getting closer and closer together, and we're kind of squeezing in more and more inside of these anchored VWAPs. And even if we throw on that anchored VWAP from 67K, even essentially in this zone, we're starting to squeeze now between this anchored VWAP and the anchored VWAP from 82.8K. It is just looking more and more like this. When we squeeze this tight together, when you do see a resolution, you generally get some pretty big follow through that occurs. And major decision points, I would say we could probably go another week or 2 weeks within this range, but besides that, man, we're squeezing so tight together. I do expect a big move, and it could be tomorrow for all we know. Okay, so Peoria Beat, what's up, man? Welcome in. Pump and dump short squeeze. Yes, okay, thank you, Mr. Rekachun, for mentioning that. So, guys, so far the move that we are seeing not only yesterday, but the move that we are seeing today, if we go on to our order flow here, it has essentially been another short squeeze. And remember, short squeezes are not healthy moves to the upside. It's really just stopping out late traders or traders that are not over leveraged or using improper risk management, or maybe not using improper risk management, but probably didn't have the best trade setup. So you can see yesterday, as we were pushing up yesterday, all day yesterday, pushing up and seeing that liquidity grab of 64.5K, for a majority of that move, you can see that our open interest was decreasing here. And so essentially that is a short squeeze that is happening. But even if we look today at the move that we saw today, we saw a corrective range form overnight. And then if we look at the move that we saw today, you can see it's coming right up into that move. So let me zoom back in onto the 5-minute chart, because you can see as we are coming, let me get this. Where are we at here? There we go. All right. As we're pushing up today, within this move and within all right, sorry guys, let me get in here. Yeah, as we're pushing up today within this big spike in volume to the upside, coming up to hit that 786 in that weekly level, we saw the open interest was actually dropping all the way until we got to the highs. So this is very, very important to understand this. And I do not know what's going on with this CVD here. Let me just get this here. All right, so you can see that we're seeing a consistent and steady and pretty heavy drop locally in open interest. And as soon as we top out on the highs, I'll throw a vertical line right on those highs, and you can see that is where our open interest stops dropping. So that means essentially this move up that we saw was on a decrease in open interest. And what is a short that is forced to close out? It's a market buy. So you should be seeing at the same time, you should be seeing your CVD increase here, which it is. So essentially this entire aggressive candle that we saw today was a short squeeze to the upside. It was short. It was stopping out all of the shorters that shorted the swing failure pattern yesterday, including myself. So let's go back to the Coinbase chart and let me go on to that 5-minute chart, and we can look at the move that we saw from yesterday's highs. You can see here was yesterday's highs. We continued to kind of chop sideways and down in here. And that during this time, during this range, we saw a lot of shorts coming in. And specifically, once we had that liquidity grab, we saw a lot of shorts coming in. And all these shorts that have entered are putting their technical stop losses above that high. So the second you start breaking out of that high, you can see actually that is when our candles started to get aggressive, even on the 5-minute chart. Let's go ahead and make this bigger here. You can see some chop at the beginning. And then as soon as you start to break those highs, that's when you get that aggressive short squeeze up to make new highs here. So the move up that we're seeing, it is a strong move up. We do have a lot of volume in the move up, but a majority of the move up is these short positions that are getting closed out. Not new long positions, not the bulls stepping in, but new long positions that are causing that break to the upside. Now, if we continue to analyze our order flow here, after the highs for earlier today, you can see that our open interest starts to increase drastically. And upon that increase drastically, if you can see where my dotted line is, the CVD is right here. So since we're seeing a lot of positions open up, but it's a mixture of shorts and longs, that's why our CVD is kind of flat in here. You can see it goes up, down, up, down, up, down. So we're seeing a battle right now between the bulls and the bears at our resistance zone, at our purple box of resistance here, where we do have that 786 Fibonacci and where we do have that weekly level of resistance. We are seeing a fight right now. And a lot of positions are opening within this small range throughout the day. So essentially, because our open interest is increasing so much locally within this very tiny micro 5-minute range that we're seeing, whatever move we see out of this range, I expect it to be a pretty volatile move, whether it's going to be to the upside or to the downside, because there's going to be a lot of positions that are going to get stopped out because it's a mixture of long and shorts, and it's a lot of new positions that are opening. So it's going to be very interesting. We are at local resistance here, and it's always not smart to long into resistance. But if we look at our Elliott Wave count here, so first off, from the lows at $62,500, we do have a nice little move to the upside. We have broken market structure bullishly by taking out some of these higher lows, right? Now we have some multiple bullish market structure breaks. But from the lows, we kind of have that initial move up, kind of sideways over the weekend, a move down towards your golden pocket 786, so a 1-2. Now, is this a 3 that ended yesterday? We get a 3-wave correction in a 4, and then we get a 5 right now. So let's just discuss this specific count right now. Okay, if that corrective move that we saw after the SFP yesterday was a 4th wave, this right in here, 3-wave move, And then from there, we're pushing up in our fifth and final wave. Let's look at the structure within the fifth and final wave. So let's look at this structure in here. Let's go ahead and zoom in onto the 15-minute chart. And on the 15-minute chart, you can see that's our low right in there. We have pretty much a double bottom, by the way, guys. Bitcoin is seeing a lot of double bottoms and a lot of double tops. But if this is the actual low, we have a push up, a corrective move. Now, what I would say is this corrective move, you can label this as a flat in here for a 2. This is clearly a 3 in here, so we would be seeing some sort of triangle and a 4 right now. We would still need one more local high being made in order to complete a 5-wave move in here. Now, if we count this a little bit differently, you could say it's a double 1-2, right? Like a 1-2, 1-2. Actually, you can't. I'm sorry, we can't count that as a double 1-2 because this move is a 3-wave move. So we would have to say impulse, flat correction in here, 3. We would be in the 4th wave right now, and then we'd be looking for a 5th wave. So we're essentially looking for one more local high to be made. If we're looking at a single impulse from 62.5K, 62.5K, and we would be looking at a 1, 2, 3, 4, 5. Okay. After the 5-wave move ends, you could see a corrective move down towards your golden pocket, and then you would expect continuation to the upside because this initial move started with an impulse. You're looking for a corrective move and then another impulse to continue. Even if it is a bigger A, B, C, you're looking for at least one more impulse after a correction. But I want to show you guys a different alternative count that we could even be looking at from those 62.5K lows. Because if we're looking at this initial push up as a wave 1, we get our wave 2 here within the 3rd wave. So starting from Sunday's lows, can we count a valid 5-wave move in here? Well, we got our 1. Let me redraw that. You got a 1 here. This could be an absolute running flat right here for a 2. Here's your 3. Is this a 4 and then a truncated 5? Well, we don't see a new 5th wave. We don't see a new high here in the 5th wave. So essentially what this is saying is that the overall 3rd wave, if this is your bigger 1, this is your bigger 2, your 3rd wave can't end with yesterday's high. It can't. Because also in a impulse, if this is going to be a 1, 2, 3, 4, 5, a hard rule in Elliott waves is your 3rd wave cannot be the shortest wave. That is the only hard rule for an impulse, is that you cannot have your 3rd wave being the shortest wave. And so in other words, this move up from Sunday's low is all part of a 3rd wave. What we're seeing right now is all part of a 3rd wave, and we would be looking at this as a 1, a running flat, and a 2, a 3, the pullback from yesterday was a 4, and then we're looking for a 5 to end your 3rd wave. Now remember, this is all an internal count of a 3rd wave here. So after the 3rd wave ends, you would expect a pullback in a 4th wave, and it would be around 2 days, just like, or a day and a half to 2 days, just like your wave 2, and then you would be looking for another high. So essentially, either way we count this, we're looking for new local highs to be made on the chart. Okay, you're going to say, okay, Divine Hood, you told me you shorted this area. Why would you short this if you expect new local highs to be made? Well, first off, I explained that I'm looking at this as a scalp short position where I'm looking for a small pullback towards the VWAP, a 3-wave corrective move towards the VWAP, and then continuation. So I'm only looking to take a very, very small calculated risk on that. And I'll zoom in on this and let you guys know what I was thinking with that short trade. So we had our big push up through resistance. And I told you guys, if we hit that weekly level, I told you in yesterday's video, if we hit the weekly level and then we started to lose the 786, I would look for a short. But this happened so fast for me that I missed it. And by the time I saw it, we were down here. So I said, okay, now we need to wait for the golden pocket retracement. So you can pull your local golden pocket from the highs to the lows of this initial move down and put on your golden pocket. And if you come up to that golden pocket and you see bearish divergences or bearish CVD absorption, which at the time, earlier today, I showed you guys in the Telegram, we were seeing bearish CVD absorption. If we look here, you were seeing lower highs in the price action coming up into that golden pocket, and we were seeing higher highs in the CVD coming up into that golden pocket with a steady increase in open interest. So that is textbook bearish CVD absorption. Now, unfortunately, well, the target for that bearish CVD absorption is to take out this low down here. And I was looking for an overall A, B, C to come down to your VWAP, because if we also look at pulling, let me just go back to the Coinbase chart. If we pull a trend-based Fibonacci extinction from the high to the low to that lower high golden pocket, you could see at the time your 1-to-1 was aligning very, very nicely with your VWAP. So if we were going to see that three-wave corrective move, I was looking to short here, stop going right above this high, TP, at least a 50% TP around the 1-to-1. And that was a 4.2 risk to reward ratio trade. Right here, 4.2 risk to reward ratio. That's my actual trade that I got into earlier today. Now, technically, I have not been stopped out, but I am, with the consolidation we're seeing here, some sort of triangle forming. I let you guys know right before I started the stream that I'm just going to move my stop loss to break even, because the Elliott Wave count suggests that we are going to make new local highs. Now, that doesn't mean that we can't see some sort of triangle in here and then break down first and then see new local highs being made. We're still kind of in a corrective move here. So the corrective move that we're seeing right now could be a triangle that doesn't break down, that we kind of break right up and make new highs, or this triangle could still break down to take out the local lows, and then we could move up. So essentially, I'm going to leave this short open, but I'm being very, very cautious on my entry right now on another stop. I've lost 2 short trades, or I've got stopped out on one, and I lost another one yesterday. So I am just being cautious here with this trade. But we're at resistance. We did see some bearish CVD absorption on the charts. But as far as Elliott waves go, we are looking for new local highs to be made. 4s and 5s to be made. Some new 4s and 5s, no matter which way you count the Elliott waves, which there's a couple different options here, right? But what I would suggest is that we have some more local highs to be made. Now, if we break above this purple box that I have on my chart right now, I do think that it's highly, highly likely we come up to sweep out our 65.4K highs. We know that that was an important golden pocket. That was an important zone for liquidity, this prior liquidity grab, and it is the value area high of both of our ranges. And so if we can break above this purple box, I do think we will sweep that. And depending on how we sweep this, if it's an SFP and we fall back inside the volume profile, we have to be very, very careful for a bigger move to the downside, or a correction to the downside. 1, 2, 3, and the 3 could end on sweeping this high, or it could end now and we could get the pullback in a 4 now and then a 5. So we just need to kind of wait for more data within this small range that's been developing throughout the day. But remember what I said a couple minutes ago, this range that has only been developing for about 3 or 4 hours, our open interest has been pushing up pretty aggressively within this range. So we could see a big move outside of this range. Another thing to pay attention to, a triangle is a continuation consolidation pattern. So if we are seeing some sort of symmetrical triangle being formed in here, we do have a decent likelihood of, and actually I had it like this earlier, with that being a fake out, and then we had something like, I should probably get this right. So something like that with a little bit of a fake out here. Triangle forming. When we start to break this, we could see a big squeeze. All right, let me check the chat here. Welcome in, everybody. Mark Dutch, much love to you, man. Welcome in, my friend. Thank you so much for being here. How is your travels going, my friend? From Montenegro. Awesome, man. Mark, I bet you're just learning so much about the world and enjoying yourself so much, man. That's so cool to hear. Jason Casper in the chat. What is up, my man? Much love to you, Jason. Jason, I saw that you just started your stream as well. Are you already done streaming, man? I am sorry if I am streaming at the same time as you. I just, had to pop on here real quick. Okay, will it respect that fair value gap on the daily chart? That was the one I was eyeing, but decided for the shorts, just because everything said that we were going down. Okay, Javier, let me go zoom out to the daily time frame and let me see what fair value gap you're talking about. Are you talking about a fair value gap to the upside or to the downside? I think you might be talking about the fair value gap that goes into 72K, this fair value gap right in here. So you can see the wick ends here, and then we got that wick here. So we got this fair value gap in here on the daily time frame. Well, like I said, Javier, last time we talked about this fair value gap, we know that the start of that fair value gap is essentially an SFP of our range highs. So there's two things that could happen. If we do SFP the range highs and reject from the fair value gap, we could see a big move back down. But if we don't SFP that range high at 67,250, then essentially that fair value gap is going to suck us all the way up. And it could suck us up to our golden pocket, which is coming in around 73K, I believe. Let's pull our golden pocket from the 82.8K highs down to our 57K lows. Let's make sure that is based off log scale. I believe that was more than 30% dump to the downside. It's exactly a 30% dump to the downside. So remember, if it's more than a 30% dump to the downside, or more than a 100% pump to the upside, you want to take that Fibonacci retracement and you want to go based off log scale. Oops. You want to click the setting based off log scale, and that is going to give you your proper psychological 618 retracement, that golden Fibonacci ratio that's ingrained into the subconscious and superconscious mind of society. So you can see that essentially filling that fair value gap, you would kind of be filling it right into that golden pocket. Now, because it's right at 30%, I also would respect the non-log golden pocket, which is right here at 73 to 74. And if we pull a volume profile of all of our price action from February, you can see that the value area high is coming into that zone. So I would say if we do start to break above 67.2, it's very likely that we get sucked up towards 73 pretty quick. Bloody 77, we are going to the moon. Man, I would be okay with that. Let's just say that it's been getting very, very boring, not only for the past couple months within this sideways range, but specifically for the past 5 weeks within this, man. Like, this has just been brutal for bigger day traders and swing traders, or if you're trying to get that bigger move, more exciting move. And of course, because Bitcoin's been consolidating so tightly, like a lot of the altcoins just continue to kind of consolidate and dump a little bit. You do have some good movers, but yeah, it's I'm gonna be excited when this range starts to get resolved here. 67K. Yeah, I think it's very highly likely we could go to 67K. Like I said, we're kind of at our zone of resistance right now. We need to be paying attention to. And within that little zone of resistance, we're consolidating. And this range right here is going to tell us a lot. This little range that's been developing for the past 4 hours is really going to tell us a lot about what Bitcoin's going to do in the next few days. Yeah, short squeeze. Let's see if this short squeeze can continue. Now, remember, guys, with a short squeeze, when a short squeeze ends, you generally want to see new long positions stepping in to continue to push the price up, or to hold the price up, I should say. After a short squeeze ends, you want to see new longs stepping in on a retracement, obviously not at the highs. If you see longs coming in at the highs, that could be used for fuel for the bears to squeeze it right back down. But on a retracement, that's why I was looking for a short with a retracement towards that VWAP. So if we do drop to the VWAP, what we want to see today as we're dropping to the VWAP is we really want to see new longs stepping in at VWAP support, or even maybe not even coming all the way down to the VWAP, but just taking the liquidity of that first dump lows. We really want to see some longs stepping in. If longs do step in, that is when we could see some really nice continuation to the upside. Do you see divergences on momentum waves on 1 hour and 2 hour? RSI and CVD are also diverging too. So let's see on the 1 hour. So we were seeing some bear divs as well, guys. You see right now we're on the 1 hour. From yesterday's high to today's high, we do see bearish divergences on market cipher, but money flow looks okay. And then we see not only the regional bearish divergences from yesterday's high to today's high, but we also see local bearish divergences and money flow bearish divergences on NAMI, which NAMI is quicker. So there is some signs that we could see a bit of a pullback from here. I'm not saying a rejection fully, but I'm saying a bit of a pullback down to VWAP, or even maybe down towards your anchored VWAP around 64.2K. And then if we look at, let's just go to, let me get rid of this little guy here. 15-minute chart. If we zoom on to the 15-minute chart, on the 15-minute chart, we are seeing some bearish divergences as well. So more local or more regionally from the yesterday's high to today's high, you do see lower highs in the momentum waves. You also see lower highs in the money flow on market cipher. You can see local bearish divergence in here. And I would say, yeah, local bearish divergence from this high to this high as well. Money flows crossing into the red on NAMI here. But it's only when we start to zoom out on some of the larger time frames that things start to get a little bit bullish for Bitcoin. Now, in yesterday's video, we hadn't created this momentum wave yet on NAMI, so we did not have confirmed bear divs on NAMI on the 4-hour time frame yesterday, but now we are confirming some bear divs on NAMI. You can see from yesterday's high to today's high, bearish divergences now have formed. But market cipher's not, and market cipher's money flow overall is still curving to the upside. And even with NAMI showing one drive of bearish div, money flow overall is still curving to the upside here. And I say this a lot on the channel, but most of the time, not all of the time, most of the time, one drive of bear div will not overpower bullish money flow. And so that is what we're seeing right now with both NAMI and market cipher, but we're seeing warning signs that this impulse could be done with soon. And then if we go to the 8-hour, and I showed this in yesterday's video, but on the 8-hour, the bull divs into the lows at 62.5, and now we're pushing up. Money flow on NAMI and on, on market cipher and on NAMI look really good. They look bullish here, and it looks like we could see continuation. Another thing, let's just talk in terms of volume profiles, because we know within sideways ranges, liquidity and volume are the most important things to pay attention to. The fact that we were able to break above our point of control, break above our anchored VWAP from the lows, break above our anchored VWAP from the highs, and we're now working on flipping those into support to continue to higher levels, is a sign of strength for Bitcoin already, a major sign of strength. Breaking above the point of control and then coming down and back testing it yesterday was a major sign of strength for Bitcoin. The fact that we kind of came down, back tested it, and made new highs today is showing that the bulls are still in control locally. But even yesterday, when we broke it initially yesterday, look at what happened yesterday when we broke it initially. Break above it, back test it immediately, new local highs. That was yesterday's highs, okay? And yesterday's highs, the only reason we got a pullback there because it was a major liquidity grab. You get a small pullback, and then now we continue. And then on the small pullback, that's essentially when you back tested your point of control a second time. So we really are seeing that point of control now looking like it's being flipped to support. Immediate back test, and I know we front ran it just barely in here, but it's essentially another back test of that point of control. Ooh, okay, I just want to check to see what's going on right now here with this consolidation. It does look like we're starting to see a little bit of a breakdown here Actually, I think I have this on the chart. Yeah, so we have that trend line. What I want to do actually is I want to throw this on as a channel as well. So we're going to just go from the highs. You can see these highs coming in here. We have pretty much semi-equal triple highs, and I want to throw it onto that initial low. Yeah, if we come down to the bottom of the channel where that VWAP is, that could still give us a really nice corrective move in here, where then we could explode from there. So I will be, depending on how we move down to the VWAP, I will be essentially looking for scalp longs, but we would have to be careful how we play that, right? Because obviously we're at the top of a multi-day pump, right? From 62.5 all the way up to, you know, essentially 65,000. But even today, after an aggressive pump today, you don't want to catch longs near the highs of pumps. You generally want to catch longs near that, like, you know, the support zone, maybe near the value area low of this range that formed over the past 24 hours. But if we do come down here, we can still play the momentum. Remember, the trend is your friend until the end. And knowing the Elliott Wave count, knowing that we're looking for new local highs in here, what I would be looking for is if we do start to bounce from that VWAP, I would personally wait until we see a bounce and at maybe a 5-minute candle close above, kind of confirming it as holding a support. Then we could look to long that. Our stop would go below wherever that bounce was from, and essentially our first TP would be targeting the highs. And you can see that's still a great risk to reward ratio scalp trade. Now it is a bit more risky, right? Because look at, we do have a very nice fair value gap right in here. From this wick here to this wick down here, we have a nice fair value gap on the 15-minute time frame, where if we start to enter that fair value gap, which you can see coming down to the VWAP, would be entering that fair value gap, there is the real risk that we don't stop at the VWAP, that we do continue to flush and at least come down towards your anchored VWAP around 64.2K. Yeshwanth, much love to you. Thank you for tuning in from India. Let's see. Dr. X, welcome in. I was watching Casper, didn't know Divine was live. Took a juicy silver short right at the top, 66.5. Awesome, Dr. X. We'll check out silver. To be fair, I don't think I've checked silver since Tuesday, since you asked about it on Tuesday, but we will check, excuse me, last Friday, but we will check silver. Fadwan, welcome in. Casper highlighted you were live, so flipped over. Well, thank you, Fadwan. I appreciate that. And Jason Casper, I appreciate you as always, my man. Thank you so much for always sending people my way. Guys, Jason is one of the best traders I know. Love him so much. He is not only a good trader, but a good human being, a good role model to people. So much love to you, Jay. And Mark Dutch, thank you so much. Guys, please do hit the like button. Please do subscribe to the channel if you do get any sort of insight into the market from this live stream. In just a bit here, we can go into some of those commodities, some of the altcoins if you guys want, so you can post those in the chat. But essentially right now we're looking at Bitcoin at a major decision point, you know, within, and I know I've been saying that for the past week, but really we're squeezing tighter and tighter and tighter. Like if we just look essentially at the move that we're seeing in here, this is squeezing, getting flatter and flatter and flatter. And then even from the lows, we're kind of squeezing, getting flatter and flatter and flatter. And we're squeezing in this zone very aggressively. And when we do see a resolution of this squeeze, you will generally see some big momentum follow through on this squeeze. And so it's only a matter of time. In my opinion, it's only a matter of time before we really see an aggressive move either outside of this range. And if we do break outside of this kind of squeeze, I would expect to sweep the liquidity at 65.4 and pretty much sweep it all the way up at least to 67. But remember, our actual range highs are at 67,250. So with our 67K highs being so close to our 67.2K highs, I would essentially expect us to squeeze up to take out your 67.2K highs. We have a naked daily point of control that is at $67,400-ish dollars. It's at 67,439. And so maybe we're going to sweep this liquidity into a naked daily and then see a bit of a rejection from that. We'll have to see how that plays out when and if we do get up there. E. Mueller, how long have I been a trader? Well, that's a bit of a complicated question. So I've been in crypto since about 2019, and I started a lot with spot trading. So, but derivatives trading, and I guess you could call it margin trading, stuff like that. Probably since mid 2020 is when I really started to get serious about it, and learned a lot throughout the way. I'm still learning every single day, still kind of developing my craft. And really, as a trader, trading is not knowing. It's not about knowing what the price is going to do. It's not going to say, oh, guys, I predict Bitcoin's going to go to 72K, and then it pumps to 72K, and you say, I told you I was right. I was right. Or, oh, Bitcoin's going to dump to 57K, and it dumps 57K. I told you I was right. It's not about being right and wrong. It's about knowing your levels of interest to take long and short positions and being able to execute once it gets to those with proper risk management, because you'll never be right 100% of the time. Things can go in your favor and you will still fail trades. So it's not about having all the answers, knowing what's going to happen. It's about knowing where those key levels of interest are. And when you get to those levels of interest, if you're a confirmation based trader like I am, taking that confirmation in order to execute a trade. Looking at that confirmation. And honestly, this area here has been really nice for us. We were looking for the short because we had a naked weekly point of control at 66.8. We had the anchored VWAP up there. We had our pitchfork band here. So we were looking for a short from here. We were looking for a short from here. I believe I was looking for a long down in one of these zones. Let's see here. I know that there was a bunch of, I think I started to delete some of those boxes that we had down there, but yeah, we took a long down in this area right here. And yeah, 82.3, by the way, the ultimate swing short of this bear market. I was letting everyone know ahead of time that if we came up into this zone, this was the area to be looking for a short to take out 60K. So trading is just really finding those key levels of confluence where you look for trades and then just executing on those trades with proper risk management, of course. Yeah, risk management is Mark's middle name. Well, Mark has a very, very important middle name then, and I respect that quite a bit. 1 hour ago, SEC proposes the long-awaited crypto rules. Okay, so proposes, like... Clarity Act could be the best buy the rumor, sell the news event ever. I agree, Mark. And you know what? Like, this has been continually getting pushed back time and time again. And I think that if we see some sort of, resolution to this clarity bill or some law that passes, if it actually goes through, I really do think that we could see major sell-offs from it too. Like, even if it's a bullish, like the Clarity Act is passed, now we finally have some guidelines and rules for the crypto market. Now some of the bigger guys can get in and have that peace of mind. I really don't think it's going to be as much of a big deal as a lot of people are thinking. Of course, on the initial announcement of the Crypto Act being passed, we probably are going to see a bunch of long stepping in, but it could be that quick pump and dump type of thing that we see. Oh my God. Our Pink knows that my previous 2 dates were menopausal ladies. Ran out of protection. Mark, gosh, I love you, man. Sometimes y'all need is an anchored VWAP. Yeah, those anchored VWAPs, JR and PTRS. Welcome in, by the way. Junior Prince, welcome in. Good afternoon to you as well, Decrypto. All right. Dutchy, you're making my point of control tingle. Shogun Crypto, thank you so much for smashing up the like button. Guys, really quickly here, I just want to take a second to shout out the partners of the channel. I don't have as long today. I've only got about another 45 minutes left till I got to take off. I've got a meeting, meet someone today. So real quickly here, the main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can earn up to 40% if you do deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses based on the USDT contracts. So not just Bitcoin, but the altcoins, gold, silver, anything against USDT. Just by trading on the exchange, depending on the amount of volume you move, you can earn up to $8,100 extra. And in my opinion, if you're already doing those USDT derivatives trading, it's a great incentive to earn extra money by trading on the platform. They do have some of the best initial deposit bonuses as well. If you deposit $100, you can get a 50% bonus, which is over double what most exchanges will give you on a $100 deposit. And then they're giving you 20% deposit bonuses up to a $1,000 deposit and 10% deposit bonuses up to a $20,000 deposit, which is also double. Most exchanges will give you a $1,000 bonus on a $10K deposit, but not $2,000 on a $20,000 deposit. So if you're interested, links in the description. I've also partnered with BYDFI to create that Telegram community. It's a private community, but I do try to keep you guys, if I'm not live streaming or making a video, I do try to keep you guys updated on all the alerts that we set on altcoins, on gold and silver, and on Bitcoin itself. I try to keep you guys updated when I'm not streaming. And I also kind of post if I'm going to be entering a trade. I kind of let you guys know that trade setup that I'm entering. They're not signals, but they are notifications on when I'm entering a trade or if I am not. And so if you're interested in joining that Telegram, it is free. All you need to do is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more. You can deposit more if you want to get the bigger bonuses here, but a minimum deposit of $100. Now, the money you deposit into the exchange is your money. You're not paying it to me. You're not paying it to BYDFI. You're depositing on the exchange in hopes you will try out the exchange and like the exchange and stick with it. But once you've done that, click the Telegram link in the description of this video, and in the Telegram verified channel, type in /verify and then your user ID, and that'll get you into the Telegram. Your user ID is probably going to be a string of letters and numbers for you guys, but /verify and your user ID. I do have a few other exchanges, Blowfin, MEXC, and Bybit, all offering various discounts on trading fees and initial deposit bonuses. Links are in the description if you'd like to sign up to any one of those exchanges. It is a way to support the channel. It is a way to say thank you. And then lastly, I have NAMI Trading, which is this on the bottom of your screen, this momentum and money flow indicator you see on the bottom of your screen. And I use it for confirmations to enter and exit trades. For instance, the last big short trade we got here, you can see as we were coming up, making those higher highs with confirmed bearish divergences. It will print out and show you the bearish divergences, confirmed money flow bearish divergences as we're coming up into key resistance, as we're grabbing liquidity. So since I've been using NAMI for confirmations to enter and exit trades, my trading profits have gone up quite a bit. And it just gets you into better trades that are more likely to play out. And it keeps you out of those trades that you're not so sure on, that don't have proper confirmation. They're far less likely to play out. So if you guys are interested in purchasing NAMI, I've partnered with them to get you guys 50% off. Use discount code DIVINE50 when you're checking out on the website. Just click the affiliate link, and when you're checking out on the website, use discount code DIVINE50. Something else I can't speak too much on this right now, but NAMI is going to have some exciting new developments coming up as well. And I do not know if the price is going to be increasing or not with some of those developments. So just a heads up there. And I do not have a time frame on that for you guys. I am doing some beta testing for them right now. But there's going to be some exciting news in the coming future. All right, I got to check Bitcoin. What are we doing? Are we breaking down here a little bit? Let's see. We're about to sweep that local low of the mini range. Let's see if we can't sweep this, and let's see if we see a move after sweeping this low. I don't like how we're coming down here. You want to see a wick through this and then start to get back above. We can also just look at our volume profile of this sideways range. Let me throw on that parallel channel. Yeah, you're at your midline. You're about to sweep this liquidity. So let's see if we're going to get something like a liquidity sweep at the midline and then start to get above. Now, if we do that, if we break above this POC, I would essentially expect us to continue up here. Let's look at our order flow. How's our order flow looking? Yeah, we're seeing some shorts closing out, actually, guys. Very interesting because within this sideways range, we had a mixture at the beginning of this range forming. You can see it was a mixture of long and shorts in here. Some longs, shorts, longs, shorts, longs, and that entire time your open interest was increasing steadily. So a bunch of new positions were opening up. The bulls and the bears are fighting each other right now at local resistance, right? At your weekly level, at your 786 Fibonacci. And the last, I guess, hour or so, we did have some fresh shorts coming in from this zone. These are fresh shorts that are kind of pushing the price down here. But now we're seeing some of those shorts getting stopped out. You can see where was your open interest when that started. Your open interest was about right here. And now if we look sideways, we're pretty much, that increase in open interest is now getting, those shorts are getting stopped out. That's why your CVD is increasing here, because a closing of a short position is a market buy. That would cause your CVD to be going up. But we know it's not new long position stepping in because your open interest has been dropping during that little bit amount of time. So I guess a lot of the shorts that started to open shorts within this range are starting to close out. In some ways, that is a little bit bad for the bulls, because if the bulls were able to keep those shorts open and break this to the upside, then we could see a short squeeze, more of a short squeeze occur, right? It would be fuel to continue to push us up more aggressively. And what we're not seeing that we want to see after this short squeeze, we want to see new longs stepping in. And those new longs would also cause the short squeeze if those shorts had stayed open. And that would give us that kind of violent, aggressive move outside of this zone. What we're seeing right now is not the best looking, and it essentially means that we could see this range continue for a bit more, or we could see it drop down to some local support levels, which it looks like we're starting to get that right now. Let's see if we get this SFP right here. So finally breaking below it on this 5-minute candle. Let's see if we get above it, and then we got 2 minutes left, 2.5 minutes left. If we close this 5-minute candle above, we might be able to even look for some sort of scalp long in here. Stop would go below that local wick. And I would honestly, even just targeting the POC at the very beginning, that's a 4.5 to 1 risk to reward ratio. But overall, I would leave some of this open to target the highs. Sudeep, much love to you as well. Welcome in. Thank you for being here, and thank you for modding for me. Can we look at the USDT dominance chart? We just broke an uptrend in the daily chart. Yes, we will look at USDT dominance for sure. We'll look at USDT dominance. We'll look at silver. Time attack, much love to you, my man. Waiting for the value area high or value area low for my next trades. Not getting destroyed in retail arena, area of shorts. Well, time attack, that's pretty smart, man. That's pretty smart. You know, trade the range until it breaks. And what are the most important things within a range? Liquidity and volume levels, those high volume nodes, value area low, point of control, value area high. Let's see, Mr. Rekachun, welcome in as well. I find it very suspicious that the QQQ dropped by 1.7%, DXY on the rise, and Bitcoin magically finds the bulls. Yeah, that is interesting, huh? Now, do you think, because I know the QQQ is like the tech, you know, more tech-based in the traditional markets. DXY is on the rise, which is generally inversely correlated to Bitcoin. So if DXY is rising, Bitcoin's dropping. But once again, man, this was a short squeeze in here, Mr. Rekachun. So we could be just seeing a short squeeze of all the people that shorted in yesterday's range. We saw a lot of shorts opening up in this range. So essentially, this could have been a short squeeze, and we could now be about to follow the DXY, or excuse me, the QQQ, and drop right back down. We need to see, you know, and right now we're not seeing an SFP, guys. So no trade right now. That local scalp I talked about is now looking like in 26 seconds, no short trade or no local scalp long to be had here. So next level I'd be looking is kind of that VWAP. But let's turn on our fair value gaps. Yeah, I guess 5-minute fair value gap here, but the 15-minute is really good to look at fair value gaps. So you can see that 15-minute fair value gap. We have to be very careful because we might not bounce from the VWAP. We might start slicing all the way through this fair value gap here. Okay. And Wayne Rosi, much love to you. Good evening to you as well. Evening Divine, I hope all's well. Minnie, any updates on the new Nami upgrade? Wayne Rosi, I can't speak anything more on it right now. All I can say is something's in the works, but I can't say anything more. So I'm sorry about that, man. But I know that you bought Nami just recently, so you'll be involved in that when the time comes. And for now, I know that you're newer to using Nami. Just keep working with what it is really. It's also really good right now. So I think I might have even said a little bit too much last time, but yeah, unfortunately, I can't say anything too much here. Monday range is good. Just a different way of saying previous range. Previous day range. Yeah. It's pretty much the previous day's range. Exactly. And you can look at previous range, value area low. What I do look at for those is there's a indicator that I use called MTF levels. And you can look at your opens, your close, your previous open, previous high, previous low, previous EQ. But I believe there's a way to look at previous point of control and value area low. Maybe it was a different indicator that I was looking at for that. Yeah, I think so. But this is a good indicator to use. Like if you're doing that kind of scalping, you can see our daily VWAP, daily open is also right at that VWAP right there. That's actually interesting. You can see right there was our daily open or up at this top of the candle. Yeah. Okay. Dump into FOMC, then magically pump. Oh, is there an FOMC meeting coming up this week? Hold on. Let me check this. Yeah, it's just the minutes though. So it's the FOMC minutes. Really, minutes is just a transcript of the FOMC meeting that was released a few weeks ago. Could we see something that's written in the minutes that wasn't mentioned from the last actual FOMC meeting where Warsh stood up and spoke in front of the audience? We could, but I honestly, I don't think we're going to see too much from this. We do have, yeah, that's about it as far as the rest of the week goes as well. All right, what are we doing here? We're still dumping a little bit on open interest. Crypto dump will come in Asia market. Yeah, Dylan, we're going to have to see. We can check hype. We can check silver and USDT dominance. So let's go into USDT dominance right now, guys. I want to check that because we know that USDT dominance is inversely correlated to the Bitcoin price. And let's zoom out here onto the daily chart. We've essentially been in a range on USDT dominance, and we broke out of another previous range. Now, this is not a previous day range. This is a much larger range over a few months. And what was really important about what we're seeing here, we had our big accumulation range. Actually, let me zoom out a little bit further even. Let's go to like the 3-day time frame, because this will give you a good example. So this was the highs of our previous bear market, or that was kind of the end of the previous bear market. You can see that was in June of 2022 and then in November of 2022. Well, throughout the beginning of the bull market, we were in a very, very nice accumulation range in here. You can see how nice this was. Tap 1 right here, tap 2, tap 3, expansion, right? And even from that tap 2, you get that kind of 1, 2. Now, is all of this a 3? And then we're pulling back in a 4 and then getting a 5? Or as I had my previous count, and I still think this is a valid count, 1, 2, 3, we came up here and then we saw that nice pullback to hit the 382. And then we're in the 5th and final wave here of an expansion phase, of an accumulation, right? We're in the kind of final phase of an impulse. And I still expect us to take out this double top. We have a double top from last bear market at around 9.5%, 9.42, 9.48. So we broke up after seeing a larger correction here. We broke up, and I still think that we're in some sort of impulse that is not done yet here. So could we break down locally on USDT dominance and maybe take some of these range lows at 8.15%? Yes. Could we come down to our golden pocket? Yes. But I still think it is likely that we are going to see new highs being made here, one last impulse being made here in the next couple of months on USDT dominance. So now we can zoom in a little bit more. Let's go to the 8-hour time frame. And we're just, impulse, range, impulse. If this is our bigger fourth wave corrective move, we were looking to come down to around the 382, which was also a naked weekly point of control on a daily level. That's why we had this box down here. It was a naked weekly, a daily, and a 382, which is a wave 4 target. And then from that low, we would have to look at the chop that we're seeing. And let me just get rid of some of this here real quick. We would have to look at the chop that we're seeing in here at the start of this move. So we have kind of some 1-2s that could be being created in here. 1-2s, 1-2s. This is your big third wave. So now essentially we're looking for 4-5s, 4-5s, 4-5s. We're looking for kind of this chop in here to end this chop. And I understand those fourth waves are much longer in time and price than your 1s and 2s down here. But essentially with the overlap that started down here and then followed by the big gap, we're now looking for more choppy overlap, whether it's going to be sideways with just barely new highs or with where we start to kind of towards the end of it see that selling exhaustion channel. But I do expect us to continue making new highs, but it doesn't mean that we can't come down and sweep our range lows first. So we have some range lows that are down here. Now within this, pretty much we have this range, and then we broke up from it and we're forming a new range up here. So this, the most recent range here, is the range that we need to be paying attention to the most. So what we want to do is pull a volume profile of this sideways range. And I'm just going to go from the end of the impulse, looking at the fixed range volume profile. And you can see after we fell back inside our volume profile, bounce from POC, reject value area high, bounce from POC, reject value area high. You work your way down to value area low. Now we're kind of just holding support on the value area low and chopping. We're starting to find even a tighter range. And this is very equal to Bitcoin's tight range. Like if you look at this upside down, that is very equal to this on Bitcoin, right? The last 5-6 weeks on Bitcoin. So upside down. Now we're coming down to the value area low, and the value area low is a volume level of support, but the more times a level of support is being tapped, think of it like a piece of paper. You poke a hole in it, it becomes a little bit weaker. It still holds though and gives you a bounce. You poke a hole, comes a little bit weaker, comes a little bit weaker, comes a little bit weaker. Eventually you're likely to break it down and at least sweep the liquidity at the bottom of the range. Depending on what happens when you sweep that, if you sweep it and then get back inside the volume profile, you're expecting a big move up. But if you do not sweep it at all, you're expecting a big breakdown from this range, or what you see oftentimes is what I would consider kind of a failed swing failure pattern, even though it will play out, but it's going to be a lot less of a trade than you think. So you'll come down, you'll get the mini SF, you'll get the SFP, but you'll get the SFP just to come up to back test the value area low. You reject, and then that's when you see your kind of big move down, the start of a bigger impulse to the downside. But we're very likely to come down and start to sweep this double bottom we have in here. We have a double bottom. Could you rotate this volume profile again? Yeah, absolutely. Just like I said with Bitcoin's range, you could continue to kind of see that max pain squeezing together. But once again, look at this. We're starting to squeeze tighter and tighter and tighter, right? Or you could even go like this, tighter and tighter and tighter. And this is going to, when this does see a resolution, you're expecting to see a big move outside of this. The bias has to be for more upside though, based off the larger Elliott Wave count, the higher time frame Elliott Wave count. Let me make that clear though. You can locally sweep down a little bit more before seeing that more upside. You did have some bear divs printing actually here in this move up throughout this week. You can see Sunday was the low right here, Sunday low. So you have high, higher high, bearish divergence is forming. Money flow is crossing into the red on the 8 hour, and it's heavily into the red and looking pretty bad on Market Cipher B. And then let's go to our daily time frame, because I want to look if daily printed a hidden bearish divergence. Okay, no hidden bearish divergence here. Well, I mean, actually we do. Lower highs in the price action, and from that we have higher highs here. So we actually do have a hidden bearish divergence. I'm not sure why NAMI didn't print that there. But money flow is crossing over on Market Cipher into the red and draining into the red, and same with NAMI. So yeah, I would expect that this is going to probably break down and take out our lows, our range lows, or at the very least your Sunday lows, which is a weekend low. And we could even tighten this up and just look at this tiny range in here. Okay, so if we're looking just at this very, very local squeezing range, we do have an opportunity to bounce right now from the value area low, at least a small bounce, because we do have some bull divs on the chart. Multiple drives of bull div on NAMI. Market Cipher showing one drive of bull divs, and you're coming into that value area low. If we pull a Fibonacci retracement from Sunday's lows to the highs that we saw on Friday, let's put on that. Yeah, you're coming down to the 786, just like Bitcoin is coming up to the 786. We're seeing a move down to the 786 and the value area low. Very, very inverse. Like, look at the value area low was front run just a little bit. We wicked past the 786, and we're seeing some sort of reaction from the 786. On Bitcoin, it's the exact opposite, right? But it's the same levels. You came up to the value area high, even though you front ran it. Where are we at? Not that guy, this guy. Value area high was front ran. We're hitting the 786, and we're seeing reaction from the 786. Interesting. Okay, we're starting to get back, or we're trying to get back above that prior low. Not a clean close above it yet. Okay, really quickly here, I want to check silver and gold. I know you guys are mostly here for Bitcoin. We'll go through some of these altcoins quickly. Also, I will set an alert. Let me just do this. I'll set an alert right near that VWAP. So if we do start to drop to that VWAP, because I am interested in potentially looking for some opportunity from that VWAP. Yeah, 4 hour, Christopher, NAMI already has confirmed 4 hour bear divs. Let me just real quickly go to that to show you that. From yesterday's high to today's high, bear divs confirmed. And Market Cipher, I wouldn't say they're quite there. All right, silver. Yeah, silver is seeing a dump. Well, we're still in this sideways range that we've been in for a couple weeks now. Not a couple weeks, since the 6th. Yeah, so a couple weeks now. We're losing the value area low of the range. Okay, yesterday, actually, it wasn't yesterday, it was earlier today. We lost it. We closed below it. We're coming down to some local liquidity, but honestly, I would expect us to take out. You can see we're seeing kind of an attempt at an internal SFP here, but I would look at the range low liquidity at about 63.26. So not where we're at right now. I would look to come down a little bit lower to grab that liquidity at, 62.95. 62.95 is where it's at. Within the move from the lows on July 16th, we were looking at the potential for an impulse here. A 1, 2, 3, and we could be seeing a pullback in a fourth wave. And remember, we've been talking about this the last week. We talked about this last week. So if we look at our trend-based Fibonacci extinction for a corrective move, a zigzag correction in here, coming down to the 1-to-1 or the 1.236 is your kind of your target zone. And we had confluence. If you guys remember Friday's live stream, we talked about this a lot in Friday's live stream. And actually, I need to rework this now. That all right, changes things. So we're actually hitting into the 1-to-1 right now. And that's your previous highs, your previous range highs right there. Remember, when you have an accumulation range like this and you break out of accumulation, after rejecting from a resistance, you'll usually come back to test either the previous range highs themselves. And if they hold, you expect more upside, or you test the value area high of this previous range, this accumulation range. Now, we talked about as far as the impulse goes, 1, 2, 3, you do not want to hit the value area high because it was where our golden pocket was. So if we pull that volume profile, you can see that our value area high is all the way down at like $59, $59.50. And if we pull a Fibonacci retracement from the lows of wave 3 to the highs of wave 3, you can see your golden pocket. If you come down to the value area high, you would hit this golden pocket, which would invalidate a single impulse. We could no longer count this as a 1, 2, 3, 4, 5. We would have to look at it now in a bullish scenario as a double 1, 2, a 1, 2, 1, 2, and then you would hope to get that big explosion to the upside. But with your secondary 2 being longer than your secondary 1 being longer than your primary 1, it lessens the probabilities. So we do not want to hit, if we turn on this wave 4 targets, we want to bounce between the 382 and the 0.5. And you can see that's kind of why we have our zones here. We have the bottom liquidity grab of this local upwards range into your 382 at 62.87. And then we have our 0.5 Fibonacci coming down where we have a daily level. So that is our kind of zones we would want to see a bounce from. I will actually set an alert on this low at 62.95 because I would like to see if we could see that liquidity grab into the 382 and then get back above that liquidity grab. It might be a nice little trade that we could take. Money flow still doesn't look the best. And we did have, as we were coming up here, guys, and making all these highs. So let me just hide this range for a second to clean this up. You can see as we were making higher high, higher high, higher high, bearish divergences, money flow had topped out on that last high. Money flow is draining and we got that bearish trigger wave. You can see the multiple drives of bear div on NAMI, the money flow bear div on NAMI. So it does suggest that this is likely to break down to at least take out that 62.95 to see these bear divs kind of play out. Yeah, 8-hour had the bear divs as well. Money flow crossing into the red on NAMI and leaving on Market Cipher. Let me just check this here. Yeah, we did front run our 1.618 just a little bit. If that was a third wave, a 1, 2, 3, and then we're going to see maybe a 4 and then a 5 or a 4 and then 5. But I would still say right now, because we're breaking out of what looks like accumulation range, that I have to remain on a more bullish bias locally. So the pullback we're seeing now essentially is a corrective move to eventually sweep the highs that we made, local highs. Same thing with gold, guys. We had gold in what looks to be an impulse. You know, we kind of have this triangle that was forming in here, but with gold, I'm looking at it a little bit different. It's a double 1-2 impulse, a 1-2-1-2. And you can see this is exactly what you want to see in a double 1-2. Your primary 1 and your primary 2 are longer in time and price than your secondary one and your secondary two. Then you get the big explosion in a wave 3. Where did we end? Right at the 1.618. So now essentially we're looking for 2, 4, 5s. We want to see something like a 3-wave corrective move in a 4. Then you would see a 5, and then you would see another 3-wave corrective move and another 4, and then another 5. And you would kind of create that selling exhaustion channel, a buying exhaustion channel, excuse me, to end this impulse to the upside. Now we also are in a bigger descending channel. Let me zoom out to the daily time frame. On the daily time frame, we've been looking at this bigger descending corrective channel, because on the very high time frames, we're looking for a bit of a correction and then more upside, just like on silver. And I didn't cover that on silver just now, but we covered that last Friday on silver, how silver looks to be in like a massive weekly impulse to the upside, where we're looking to make new all-time highs in a 5th wave. Now for gold, we had that nice little range in here. We're breaking out of that range. We also broke above. Let me just hide this here. I have alerts set on the wave 4 targets, by the way. On gold, we're breaking above your pitchfork midline as well. So I'll hide this to clean this chart up a little bit. You can see, first off, we rejected from the upper band of the pitchfork. We had a strong bounce initially from the midline of the pitchfork, but once we lost it, we had a bit of a consolidation range below it, or accumulation range below it, and we broke up back above it again. So now if we come down and back test it, it could hold as support for continue movements to the upside. And that's what I'm looking for, is the back test of the pitchfork. So let's zoom into the 2-hour chart. If we look at a kind of 3-wave corrective move as well, we can pull our trend-based Fibonacci extinction from the highs to our initial lows to our lower highs. We put on those targets. You can see that we have some very nice confluence. Your 1.236 is right on top of the pitchfork midline, and then your 1-to-1 is pretty much right below your range lows, because we're forming a sideways range right here. So this is the range we want to pay attention to, the highs of wave 3 and your wave 4 targets. You guys still there? I just had some sort of glitch here. Let me know, is everything okay in the chat? Let me know. But you can see your wave 4 targets, and I really like this, because your main 0.382 is pretty much in that main zone. And actually, I'll clean this up even a little bit more. We'll go from the 382 down to your the back test of your value area low. Okay, you're good. You're back. Okay, cool. Thank you, Wagon. I appreciate that, my man. So we have our main support level, and I'm bringing it from the back test of the value area low here. Let's see if this has moved. Okay, yeah, actually the value area low has moved up. So essentially we're looking at our first major support zone being around 42.75 to 42.67-ish. And then our second support level would be coming down to grab liquidity into your 0.5. And remember, higher degree wave 4s often retrace to the termination point of a lower degree wave 4. And if we're looking at these as 1-2s, 1-2s, your third wave starts here. We're looking at something like a 1-2, maybe you would have to look at maybe counting some 1-2, 1-2, 3, 4, 5, 4, 5, something like that. We would have to look at somehow to count this internal third wave. I'm not going to go too in depth on that right now, but we do know that we have liquidity of a lower degree into a higher degree at around 42.22. So that would be the next zone I'd be looking. Let's see. Gold really wants to put in bear divs on that daily time frame. Let's see that. If gold, yeah, the bear divs could give us our wave 4 retracement, on the daily time frame. If we do have some bear divs, at least Market Cypher's not showing bear divs, but the money flow is starting to round out and roll out again, which could get pretty aggressive. And on NAMI, you have some very wonky bear divs on the daily. You can see higher highs in here, lower highs in here, followed by a bearish trigger wave. Let's go zoom into the 8 hour. I like to look at 8 hour as well, the 8 hour time frame. So yeah, you had a triple drive of bear div on NAMI, followed by a hidden bear div on that lower high here. So what that means is as we were forming this up into the 1.618, which was a rejection area, we had bear divs confirmed, multiple drives of it. And then on the lower high, we printed a hidden bearish divergence, which means you would expect to continue this local downtrend. So we're expecting to take out our range lows around 4,300 or 4,309. We have kind of a double bottom of the range lows at 43.13. I guess this is at 43.10. So I would expect to take out 43.10 locally at least. But the main box of support, like I said, the main box of support for me, the main confluence is around 42.75 to 42.67. Overall, we're looking for continuation. Doesn't mean we can't see a pullback in the next week or two down to here or down to here, 42.22. But overall, we're looking for new continuation to be made based off of kind of this in here. Okay, streams. Yeah, thank you, John and Peoria Beat. Is the stream still glitching out? Check, check, check. No sound. Can you guys hear me? If you can hear me, refresh your chat or refresh your YouTube channel, and I think that'll help. All right, let's see here. Let's go check Bitcoin really quickly, and then we can look at Hype and Solana. Yeah, I would say we're kind of struggling here, guys. We're losing our little micro channel midline backtesting, and you're also backtesting those previous lows. And it depends on if we can get back above it, we might be able to see a bigger move up, but I would say that we're probably going to continue to grind down to the VWAP just based off the way money flow looks right now too. Everything's fine. Thank you, guys. Yep. Okay. Thank you. I appreciate that, guys. Open long on BTC. So Sandabeer 93, if you're going to open a long right now, what I would be doing personally, now this is not financial advice, I'm not a financial advisor, but we have this little mini range that's developing in here that looks to be corrective. And the reason why, if we look at volume, volume is decreasing as we're forming this range, right? It's overall decreasing. Yes, we did have a nice spike at the lows, but overall volume's decreasing. So that means it's more of a sign of a corrective move. Elliott Wave suggests we're going to get new local highs above today's highs. So if you're looking to take a long on this, because we've already missed the major pump today, you would have to take a scalp long with proper risk management. So if we can get back above these prior lows at 64,601, you could look to long once you start to close above. And then now you would put your stop below that local low that we just made a few minutes ago. And I would be targeting to take out the highs, right? That's almost a 6-to-1 risk to reward ratio there. Now, I am personally not going to take this, guys, because I do think that we could see this kind of chop and continue to roll down to the VWAP. Actually, let's look at that 15-minute fair value gap. I want to zoom back out to the 15-minute. And did we start to enter that fair value gap? I know we started to enter it, but yeah, you can see on this, you can see the fair value gap started. And we're entering inside. Actually, are we hitting the 50% mark? Hold on, let me get rid of that. No, you can see, I don't know if you guys can see that, but right in here, it gives you a little tick mark for where the 50% of the fair value gap being filled is. I don't know if you guys can see that at all, but it's there. And sometimes you will see a bounce from filling in 50% of the fair value gap. But we didn't quite reach down there yet. Yeah, so I personally am not looking for a scalp long right now off of this. Also, you would want to see if you were going to look for a long right now, you would probably at least want to see bull divs on the 5-minute. So if you zoom into the 5-minute between the lows, right? So you have a low, a lower low, a lower low. You would want to see some bull divs forming here. Now, you don't really actually see that right now. Money flow is also leaving out of the asset. So for me, it's not good enough. It's not good enough. I think we're going to continue to grind down a little bit. Now, yes, along at the VWAP's a different story, right? Along at the VWAP, if we bounce, remember a VWAP is your intraday trend volume support. In this case, it's support because we're above it. So yeah, if you come down to VWAP, oftentimes you will see new longs stepping in at VWAP, kind of holding the price up and continuing that local trend for the day. And the local trend for the day is bullish. All right, I'm going to check hype really quickly here. So hype, we were coming up into a resistance zone. And remember, we had our 1-to-1 to our 1.236 up here. If we're looking at a larger corrective move, we would expect to reject relatively soon. And we would be looking at something like this, we did bounce from taking liquidity. And I believe the bottom of this was a golden pocket. It was the 0.65 of a golden pocket. Now, after that, we're either looking at an A, B, C, where we're going to reject either in this general zone that we're at right now and roll over, or I would say we're probably going to make it up to this zone and roll over if that's the bearish case scenario. But that means you would be eventually looking to take out this low at 51.25. Now, in a bullish case scenario, we could be looking at a 1, 2, and then you'd be looking for a 3, and this 3, you would want it to expand towards the 1.618. So if we pull a trend-based Fibonacci extinction from the lows of 1 to the highs of 1 to the lows of 2, we go to our 1.618. It's at around 65, 65.5. We would want to see this probably pushing up, and I would actually want to see it pierce that a little bit and come up into this resistance zone. Golden pocket, daily level, naked daily point of control. And then you would want to see a pullback from there, and then another new high being made. And we could be rotating up to the value area high. Let's talk in terms not of Elliott waves, but let's talk in terms of the volume profile trading. Okay, you can see we have an upper range that we've been in all the way back to going back to May in hype. It's this sideways range right here. Well, after losing the value area low of the range, we bearishly backtested the value area low. And when you rejected on this bearish backtest, now you expected to come for the range lows, the liquidity of the range lows. So what did we do? We bearishly backtested, we rejected, we came and took the liquidity of the range lows into a golden pocket. Remember, there was a golden pocket down here. If we pull, I mean, I can show you guys that if you want to see that, the golden pocket is there. Golden pocket. And actually, I think I had that on log scale because that was, oops. Or maybe I was pulling it not log scale, but from down here. Yeah, golden pocket in this zone. We took liquidity. We bounced from the golden pocket. After bouncing from the golden pocket, what we did is we made it back up inside the volume profile. Bounce, make it back up inside the volume profile. And if we pull this back a little bit, I guess the value area low was the same. So yeah, we're making it back up inside the value area. After getting back inside, you back test the value area, and now we're working our way up to the point of control. So depending on what happens at the point of control, you could see a big move down from here. Or if we break above and flip it locally to support, you would continue to work your way up in a wave 3, where maybe we could work our way all the way up to here. And then, sorry, not roll over from there. Then you would see a 4 and then a 5, because you would be looking at 1, 2, 3, 4, 5. You would work your way up towards the value area high of the range. right? Because if you break above the POC and flip it to support, you look up to go towards the value area high. Now, we still have a bearish scenario here from the highs where we had on the daily time frame, we had bear divs. You can see here, bear divs on the chart, bear divs on the chart. And what we are looking for in a bearish scenario, which in my opinion is not the most likely, but it's still a possibility, is seeing this as a wave 1, a wave 2 where we rejected from our 786 Fibonacci, a wave 3 here. We're looking for a wave 4 and then a 5, a new lows to be made. And in the 4, you're looking for the ABC, A, B, C, right? So you're looking for a 3-wave move right here and then a roll down to take out the lows in one last impulse to the downside. So what are your targets? Your targets are between the 382 and the 0.5. Well, guys, there's a reason why I have the purple boxes where I do. Your 382 Fibonacci pulled from the highs of wave 3 to the lows of wave 3. Look at where we're rejecting at right now, or on the daily time frame. We wicked above it, but still our daily candle body has not closed above that 382 yet. Okay, so you're in your first zone, which is the point of control in the 382. Now, if we start to close our daily candle above this 59.44, there's a real chance we could continue working our way up to the next purple box of resistance. Right? And that I would actually, this is not pulled. There we go. Which would be from 62 to like 62.6, where we have a naked daily point of control, 0.5, your 1.236, because remember, in an ABC correction or a zigzag correction, your main targets are between the 1-to-1 or the 1.236. So with the 1.236 having your 0.5 Fibonacci, which is also a 4th wave corrective move target, a daily and a naked daily there, we could still come up to 62, reject from 62, and roll over to make new lows below that guy, below 51. That's your more bearish scenario on the daily time frame, is, you know, an impulse down. Now, the one reason why I'm saying that I don't like that as much as our bullish scenario, because in an impulse, wave 1, wave 2, your third wave generally comes down to the 1.618 or lower. Well, where do we end this? If we pull a trend-based Fibonacci extinction from the of this move down, you can see that we actually ended right around the 1.236, which is the corrective target, right? Right at that 1.236. And that means that this could have been an ABC, and now we're about to see an impulse, a 1, 2, 3, 4, 5, and start to impulse up here. And because our third wave was so short here, in my opinion, it makes it a higher likelihood that this entire move down was a corrective move and that we could be about to blast up. And if that's the case, after a corrective move ends, you eventually look to take out the highs where the correction started. It doesn't have to do it in the first impulse. 1, 2, 3, 4, 5. You could get another pullback and then another 1, 2, 3, 4, 5 where you finally take it out, you know. So it doesn't have to be right away. But if this is a confirmed 3-wave move, then eventually you're looking to take out those highs around 76.9. Now, as far as where we're at right now, we're at our local zone of resistance, point of control, and your 382 Fibonacci. And we do see some bear divs on the chart. Higher highs in the price action, lower highs in the momentum waves. Your money flow is draining out. You see the bear divs confirmed on NAMI. Money flow is trying to drain out overall. And then let's go to the 4-hour. Yeah, bear divs confirmed on the 4-hour. You also have money flow bear divs confirmed between this major high and this major high. And if we have 8-hour bear divs between those two highs, it's not going to look good. You do not have bear divs on Market Cipher on the 4-hour. But let's go to the 8-hour. Ooh, yeah, okay. So we do have some bear divs, even though it's not printing it. You can see that this lower highs in the momentum waves, higher highs here. Money flow also has bear divs between the major highs. So not what you want to see for the bulls. Not what you want to see. I would be really paying attention to the daily and especially the weekly candle close. But your daily candle yesterday closed above your POC. You can see how we closed the candle body above the POC. If we lose it and close below it today, that is a harsh sign because look at, you're essentially rejecting from your 382. And remember, the 382 acts as strong resistance in a strong downtrend. It acts as strong support in a strong uptrend. This has been a pretty strong trend to the downside. So yeah, if you reject from this, that means you're likely to take out the lows. Okay, okay. All right, thanks guys for letting me know the stream's good. Yeah, it is low volume right now, that's for sure. Oh my gosh, guys, I just saw the time. I do got to get going here. I'm sorry, I do have somewhere I got to be in about 30 minutes or less than 30 minutes now. So I will be live again Thursday and Friday. Please do hit the like button if you did get any sort of insight into the market. Remember, if you want to get updates while I'm not live or making videos, join the Telegram. The Telegram, all you have to do in order to join the Telegram is to join BYDFI using my affiliate link in the description below. Deposit a minimum deposit of $100 or more. Once you've done that, you click the Telegram link and you type in /verify in your user ID, and that'll get you into the Telegram. But I appreciate all you guys so much. Thank you so much for your good questions, support, everything. And I will see you guys